Hello everyone, good morning and welcome to today's morning report with me, Richard Perry, market analyst at Hantech Markets for Tuesday the 15th of July. The European session has got off on a fairly mixed footing, and that came despite a strong move to the upside again on Wall Street. Wall Street reacted positively to the improved risk sentiment in the markets yesterday, driven by decent earnings from Citigroup, but also Mario Draghi saying that there was a commitment to the fact that QE remains on the table for the ECB, and that's an option that they can call upon. Markets closed high, about 0.5% on the S&P 500, an all-time intraday high again on the Dow. And that positivity drifted through into the Asian markets overnight. The yen certainly was weaker. Again, that's a second day in a row of yen weakness, and that was also driven by the Bank of Japan, which actually stood pat on its monetary policy, but it also cut its GDP forecast for 2014 by 0.1%, so a slight weakening in the yen, which helped the stock market as well. In terms of the dollar index, it's actually just slightly higher today. The dollar is pretty much stronger actually across the board on pretty much all the major pairs, and that comes ahead of the testimony of Janet Yellen, which is this afternoon, starting at 3 o'clock in the in the Senate Banking Committee, and she is giving her first real public comments on monetary policy after that incredibly strong non-farm payrolls report that we got last couple of weeks ago, which confirmed that Q2 employment was strong across the board. So it suggests that we should have a decent rebound in US growth in the second quarter. What that is leading people to suggest is there may be a very slightly hawkish, or less dovish, shall we say, outlook by Janet Yellen, as she no doubt will have to start talking about inflation as well. So we'll see what happens there this afternoon. That is the main thing that we've got going on today. But you've also got UK inflation. CPI for the UK forecast to come in at 1.6%, so that's slightly higher from last month, which saw a drop to 1.5. That's at 9:30 today. Then after that, you've got the German ZEW, which is forecast to come in again down at 28.2. So that would be pretty much. Throughout 2014, this ZEW expectation is coming down, so that's not a great trend that's building there on that indicator for Germany. And then into the afternoon at 1:30, we've got the US retail sales that are forecast to pick up slightly to 0.6%. That takes me on to my chart of the day, which is silver. Now, we had strong corrections in both silver and gold yesterday. I'll talk about gold in my gold analysis in a bit, but silver certainly had a strong correction as well. Now, you'll notice when I talk about gold is that gold has already tried to break down through this key support that's the equivalent on the silver at $20.66. Gold has actually just poked intraday below that, but it's currently trading around that level. But silver's still quite nicely within that, and ultimately it looks like that if this support is holding, which in the early trading today suggests that it is at the moment, then it is a very could be even a buying opportunity. But you've got some negative trading signals here. You've got what could arguably be an evening star formation, although it certainly isn't perfect because it came below the high of the previous session. But that was a strong green candle followed by a doji, and then a strong red candle. That is arguably an evening star pattern formation. there, which is a negative signal, as I said. You've also got these momentum indicators which are just reversing as well. So I think the main takeaway from this chart is this support here now at 2066. That is the key indicator for the near to medium term, because if it breaks down through there, I think that is now going to be an indication that the bulls have lost control, because this was a very nice consolidation pattern that built before we saw the breakout last Thursday, and that breakout came on the back of that Portuguese news. But obviously that move has been entirely retraced and more, but we're back into this consolidation now, and if that consolidation were to be breaking to the downside, then it would suggest that we're starting to turn more bearish, I think, on this chart. Certainly in the near term anyway. But if that 2066 level broke, you're probably not going to be. You're probably coming back towards this support band around the $20 mark, which is basically where the next real support starts to come in. And there's a support band between 1980 to $20. So it's there'll be about a 3% correction potentially. So it'll be interesting to see if that support can hold in the next day or so, considering these momentum indicators are turning more corrective. Okay, so I wish you good luck in your trading on silver today, and I will speak to you later.